Hello, this is Kyrill Asatur with Centerfin Capital, and this is our collective weekly for the week ending March 29th, 2024. As always, we like to highlight a handful of issues that we think are interesting and important to bring to your attention. This week, we'll discuss Japanese interest rate policy, which is probably a little wonky for most of you, but it's important. Secondly, we'll talk about gold and the price breaking out to continue its all-time highs and why that's important. And last but not least, we'll talk about the latest meme asset and why that might surprise all of you. So first, starting with Japanese interest rate policy, why do we even pay attention to that in the first place? Japan was the first economy that, post their bubble bursting in the 1980s, went to a very highly accommodative central bank monetary policy. What does that mean? That means that they brought their interest rates down very, very low in order to stimulate the economy. And they've continued that path for a long time, including in 2007, actually bringing their interest rates to negative levels. So they set their interest rate at negative 0.1. Last week, they actually changed and hiked their interest rates to positive 0.1. And it's trivial in its size, but it's not trivial in its symbolism, in that for the first time, Japan has actually hiked interest rates to above the zero bound. Now, why is that important relative to the rest of the world? As we all know, the world has experienced significant inflation starting in 2021 and 2022, and the central banks in the world have responded by hiking interest rates in the US and Europe and across the world. Japan has resisted hiking interest rates, even though inflation was a problem there as well. Them exiting the negative interest rate regime is symbolic in that they're admitting that inflation is a problem and they're trying to do something about it. Now, one of the things that should happen when a central bank hikes interest rates is that the currency relative to other currencies should go up, and that actually helps domestically with inflation. In this case, the currency actually traded down above the news, even though it was widely expected. Now, what does that mean in terms of a weaker yen versus the US dollar and the euro? It means that their exports, Japan exports lots of cars across the world, their exports are actually more attractive, and so it boosts exports from the economy, but their imports, which for Japan are largely energy and food, are more expensive. And so that means more domestic inflation, and that yields public discourse that is not positive. What we think that means is the Japanese government will have to intervene to prop up the currency, basically, which they did for the first time in a long time in 2022, numerous times. But it is trading, the Japanese yen versus the US dollar is trading at levels not seen since 1990. So we're at an interesting inflection point. Again, the reason why we follow Japan's interest rate policy and what the central bank is doing is because they were the first in the global developed world to lead with this accommodative interest rate policy, which we have followed in their footsteps. We think that while there are many differences between Japan's economy and the US economy, mainly demographics, that this could be an interesting blueprint for what is to come in the US as we struggle with some of the same things that they've been struggling with for decades. As a reminder, Japan has experienced what they refer to as the lost decades, which has basically meant that there's been very little growth and, as I mentioned before, fighting deflation and trying to spark inflation. And they've accumulated a ton of debt. Their debt to GDP is the highest in all of the developed world. In the US, we are just embarking on that same path. And so following Japan helps us understand how we might react in the near future. Next, gold prices. Gold prices closed the quarter at their highest level. They broke out earlier in the year and continued to trade higher to close the quarter. Gold is known as an inflationary asset, meaning it protects you against inflation. However, in 2021 and 2022, when inflation was very high, gold in US dollar terms was fairly flat. And so that was frustrating for market participants that were using it as an inflation hedge. Now, we think that gold breaking out right now, as inflation is actually coming down, is interesting because it could signal a new regime in the global currency world, because the other central banks across the world have actually been buying up gold. And we've noted that recently. We think that could mean that the status of the US dollar in the global currency regime is changing. We follow the price of gold. We think it's an interesting allocation in client portfolios. And we also follow silver, which has notably not broken out to all-time highs. We think that if things continue the way they have been going, should follow. Last but not least, there was a chart that was being passed around social media showing a huge spike in price And most people would have thought that this was the latest crypto meme coin or maybe the latest semiconductor stock that is doing something about AI. But in fact, it was cocoa beans. So it was the futures for cocoa beans. And they spiked something like 130% since the beginning of this year. This is not very common. Now, this is also not very relevant for the global economy, but it does speak about the supply chain and how potentially disruptions in the supply chain can increase prices in certain input commodities and hence influence inflation globally. Cocoa is produced largely in West Africa. About 60% of production is in West Africa. And they've been ravaged by some weather over the last couple of years that has significantly decreased the production of cocoa, and hence the prices of cocoa have skyrocketed higher. Now, again, for chocolate lovers, this is not good news because the price of chocolate is likely to go up, especially as we get into the Easter holiday season here with chocolate eggs. However, we think it's a good example of the fact that we live in a largely globalized society and globalized economy where disruptions in commodities can lead to these large price spikes, which are inflationary. And more notable than cocoa, it's obviously input prices into the current energy infrastructure. Oil and gas is obvious, but also all of the metals that you need in order to convert our energy infrastructure from the current oil and gas regime into the electricity fueled regime. So there's tons of metals that need to be mined in order to create the batteries to house the electricity. And those things are largely mined outside of the US. It's just an interesting example to bring to your attention of where something that may not be relevant to most has experienced the kind of supply-driven inflationary shock that we witnessed in other assets over the last couple of years, which is a very different regime than we've lived in for the last couple of decades. As always, please drop comments and let us know what you'd like to talk about. We'll keep you posted on monetary policy, cryptocurrencies, AI, and whatever the topics of interest are.